Hey guys, it's Adam Rose, Vice President, Senior Loan Officer, Western Ohio Mortgage here in Sydney, Ohio, and this is another episode of the Mortgage Guy Podcast. And this week I wanted to discuss blanket mortgages, bridge loans. Okay, so there's a difference between the two. Both one's a very, very old school product. The one's a little bit newer, has some changes to it that's becoming more and more prevalent in this market. That's more and more competitive each and every day. So I wanted to touch on those two. So let's talk about a blanket mortgage. Hard to find. For sure. We personally do not do them. There are still some savings and loans types of banks that might still provide this product. Had an investor a little while ago actually still had one. I'm not sure where he got it. So it's a very neat home loan program where what it's going to do is exactly what it sounds like. It's a blanket, right? So it's going to encumber multiple properties, multiple parcels into one mortgage. All right. So let's say you ran into a seller that has 10 investment properties that they're trying to unload to you, and you buy them, okay? So you're going to have one set of closing costs that's encumbering all 10 properties. So let's say, I don't know, it's $500,000 to buy all these properties, okay? One mortgage, one set of costs. It's expensive to do, yes, but one set of costs, not 10 different transactions, which is really nice. It's great for an investor, right? Especially if they plan on holding on to them for a long period of time. So what's the downside? Well, the downside is, for example, let's say you bought those 10 properties for $500,000 for that one transaction. What's going to happen is if you decide to unload one of those properties down the road, maybe you think you're going to make $100,000 on one of those sales, you're not going to make $100,000. Okay, so let me explain that. So when you have one mortgage encompassing multiple properties, when you sell a piece of that off, your loan servicer or your lender has to do a partial release, releasing that piece of the property out of that encumbered whole, right? It's hard to explain. So you are doing a partial release, releasing that asset from the mortgage itself. So if you made $100,000 on one of the properties, that $100,000 is going to be applied to reducing the entire blanket mortgage balance, okay? And then now you remain with 9. Now you push that balance much lower. It's very quick. But doing a partial release does have some red tape attached to it. So you want to contact your lender to kind of get the guidelines on how that works. But a neat program. But the blanket mortgage sometimes get confused with a bridge loan. All right, they think it's one and the same. So we do offer a bridge loan here. We created it in 2020, 2021 when the market just got crazy. A lot of competition. Sellers were wanting to do non-contingent offers. So a non-contingent offer is when you don't have to sell your own property in order to close on the next, right? It's more attractive for a seller knowing that we have a home buyer that has no strings attached. They're just ready to do this thing, ready to dive in. So we created the bridge loan product here. And it's not a specialty program, right? There are other lenders that do have this program as well. And again, it's become more prevalent in the last couple of years with the competition where it is. So what we're doing is, so let's say we have House A, okay? House A is your current home that you reside at. We will call this the departure home. But you want to buy House B. But the seller of House B, they have 20 offers, they're over asked, they got conventional, they've got cash, they got all this fun stuff. And you want to make sure that your offer is as attractive as possible, so you want to go non-contingent, meaning I don't have to sell my departure home prior to closing on the new. All right. So in order to do that, you may need the down payment. You may need closing costs. You may need to pay off debt to qualify. We are going to offer you a bridge loan on your existing home, home A, or the departure home. So we are going to use the equity in said home, put a mortgage against it in the form of a second mortgage, right? This is the bridge loan. So let's say it was, I don't know, $20,000, so you can put 20% down on House B. So we're going to put the mortgage on existing home, get you the money. There's your down payment money for House B. Now, this program is very neat because not only does it make your offer more attractive, but we can utilize it in a couple of different ways. We're very flexible in how we do this. Example, use this program to not only do 20% down for one of my clients, but they borrowed extra. They wanted to get the closing costs covered. They also paid off a bunch of debt to help them qualify with both house payments, right? We're not just qualifying you off of House B house payment anymore. We have to qualify your debt ratios off of both homes at the same time. to make sure you can carry those payments just in case you can't sell your property right away, which in this market is not very challenging. Now, in a nutshell, bridge loans or seconds are designed, this specific program is designed for short-term financing in nature. Okay, so we're not hanging on to this thing for 10 years, 5 years, whatever. It is a 6-month interest-only payment in order to get you from house A into house B as quickly as humanly possible. Okay, so that's something to keep in mind is, hey, we are still going to sell our departure home as quickly as possible. We're just trying to make our offer more attractive and access funds to put down on the next property. Now, this program is not made for everybody, right? The debt ratios play a huge role. Credit scores play a big role. The type of financing that you're doing on the next home may play a role. Okay, so if you want to find out if this option is right for you, do give us a call at the office at 937-497-9662. You can talk with myself, my associate Justin, who works for me. He can help you out with this as well. And we'll see if this is a good fit for you so we can get you back into the market, buying that next dream home without the worry of getting your offer accepted or contingent on the sale of your home. That's it for me this week, guys. Remember, go out to YouTube, subscribe to our channel, check us out on Spotify and Apple Podcasts, and we will see you next week.